Hello everyone, welcome. This is my third take on this lecture. Kind of annoying. The first time the mic wasn't working, so apparently I had chosen the wrong microphone option. Anyways, only recognized this after the fact that the entire video was recorded. Sucks, but it is okay. And the second recording, actually right before I'm recording this one, when I finalized the recording, I realized that only 3 minutes was actually recorded. So, I don't know what went on there. Anyways, let's get into this video. I don't want to waste any more time. Before actually talking about the swing trading lecture here, I want to mention that this is a side part of Chapter 4's release tomorrow. So I was supposed to release this video on Sunday. However, a lot is planned for Sunday, so I'm releasing this on Friday, which is today. Before getting into this, I would like to take a look at NQ, break down the 9 a.m. CR model from this morning. It was picture perfect, and all of you guys should have executed the trade if you were trading NQ. So starting from a 1 hour time frame, you can clearly see the 1 hour high and the 1 hour low depicted by these thick black lines. 8 a.m. high, 8 a.m. low. Dropping down to a 15-minute time frame, you're going to find another CRT. The 8:45 candle was turtle souped, and this is the 8:45 candle's low. Dropping down to a 1 minute time frame to locate your entry, of course, that would be the order block. Close below this thick up close candle confirms this order block. Tapping into it, entry short. My entry fell right in between this order block and this fair value gap, also known as a unicorn entry. That's what ICT calls it. Write this down. A unicorn entry is when a fair value gap is within the order block. When a fair value gap overlaps an order block, that is the unicorn entry. So 15-minute high and low, 1 hour high and low. 15-minute and 1 hour highs were swept at the same time. Order block confirmed. 9:30 market open, tapping into the order block and pushing prices lower. Your partials would have been the EQ of the 1 hour range and final TP at the lower end of the 1 hour range. Those of you who saw me post this picture on Twitter and in the public channel would recognize that I took partials here as well. Why would I take partials here? This is the low that caused the turtle soup. If you go to a 3-minute chart, it is more visible, much clearer. The low that caused the turtle soup, that is exactly where my other partial was. Now, if you only focus on taking trades, targeting the low that caused the turtle soup, the low that caused the purge, you will have a much, much higher win rate. Win rate. Much higher win rate, but lower profits. Very good model nonetheless. With that being said, very straightforward setup here. Order block, entry short. With this being said, we're going to hop straight to the Euro chart and dive into the swing trading lecture. We are going to focus on the Euro US dollar here. Maybe we'll get to futures after. I am not sure. I wasted a lot of time trying to record this twice, so let's see what happens in this go. So for swing trading, there are rules that must be followed. And these rules can be applied to your intraday trading methods as well. If you are an intraday trader or a scalper, you can simply ignore this video. If you are an intraday scalper and a day trader and you want to increase your understanding of bias and directional order flow, then this video will help you out a lot. This one lecture will help you simplify things. So starting on a monthly time frame, we'll draw out a range high and low. The most recent range high and low for the euro dollar, we have a high and a low right here. Dropping down to a weekly time frame, you can clearly see the low was swept and the high was swept. So the low that made this high is important. Why? This high was turtle souped. This low will be targeted. This is our range. Now, it is very important to understand that CRT forms everywhere. Does that mean it is valid to take and execute? The answer is no. Where are you supposed to look for CRTs? Where are you supposed to look for entries? Rule number 1, as Romeo says, buy low, sell high. Or don't sell low and don't buy high. So, keeping that rule in mind, you must only look for CRTs at the low or high of a range. This is a monthly range. You do not execute trades in the middle of a range, you execute them at highs and lows. Now, monthly range low, monthly range high. Let's drop down to a weekly. Actually, before we do that, there is a monthly CRT that is sticking out like a sore thumb. Low and high. 3 candle CRT on a monthly chart. This is a swing trade. Monthly low, monthly range low, monthly CRT at the range low, high probability. Dropping down to a weekly time frame. You can clearly see a weekly CRT within that monthly CRT. Lower time frame CRT within a higher time frame CRT. This becomes even more high probability. All right. We have a monthly low, a monthly CRT, and a weekly CRT. High probability setup. Now, where do you find your entry? CRT is bias. So as Romeo has been saying, CRT is bias all over his Twitter, all over his Telegram. Using CRT from a monthly time frame, we can now look for a trade on the lower time frames. So if you are looking at a CRT on a monthly, you would find your order block on a daily time frame. Your order block just so happens to be right here, a thick down close candle tapping into liquidity, sweeping the monthly CRT low, tapping into the monthly range low as well. Order block confirmed with a close above entry right here, targeting the range high, which is right over here. So we have a 2-hour trade on the euro dollar. Order block right here. Let's draw this in black. Order block and about a 291 point pip, take profit here with a 2-hour trade. That's how you would enter from a daily time frame if you were only looking at a monthly CRT, which you should not be doing, as you guys are all more advanced than that. So since we have a CRT on a weekly time frame, we can now refine the entry even more. So your order block from a monthly time frame, monthly CRT, comes from a daily chart. Your order block from a weekly CRT comes from a 4-hour chart. Let's go ahead and see if we can refine the entry. Weekly CRT low and high. Order block confirmed with a close above the candle. Close above entry right off the bat here. Targeting the highs. With a tight stop loss. So if you guys were wondering, how does Romeo, how do all these other CRT traders catch these extremely large moves with tight stop losses? They refine their entries from a monthly chart down to a 4-hour chart. You can even go lower. Now, is there a point to go lower? No. All right, so we have the weekly CRT, 4-hour order block entry. Take your partials at the EQ of the monthly CRT, and final take profits at the highs. Now, if you do not want to trade this entire range, monthly CRT, you can simply trade the weekly CRT. This weekly CRT in itself is a swing trade. If you would have entered right here, your full take profits would have been hit in a total of 19 days. So 19 days to hit your total final take profit if you are only trading the weekly range. Of course, take your partials at the EQ of this weekly range and final take profits at the high of the weekly range. This is a perfect swing trade. We have a lower time frame CRT within the higher time frame CRT, tapping the key level, which is the monthly range low, pushing prices higher. Recognize how we went from a monthly to a weekly to a daily to a 4-hour. And there was always something to be looking for when dropping time frames. It is not random. All right, let's take a look at another example. Let's get out of the monthly chart, even though there is more CRTs all around us here. I want to put your focus on the weekly time frame. We have a high being purged, turtle soup. What do you see? Well, first off, we have a weekly CRT. Very visual, very much clear, okay? Now, why is this a high probability CRT? You probably don't know the answer. There is an answer. High probability weekly CRTs. There is two high probability weekly CRTs that you can go ahead and backtest. And only two. Do not fool yourself into thinking that there are more. There is not. So, the first high probability weekly CRT that you must take into consideration is the first week creates the CRT range, being accumulation. Second week, manipulation, turtle souping the CRT range that was formed within the first week. And week 3 will be distribution, as well as week 4. Or week 1, continuation. Week 2, accumulation. Week 3, manipulation. And week 4, distribution. What is continuation? Continuation of the trend that was happening before. Okay? So, meaning in the previous month. And then the second week accumulates, finishes the creation of the range. The third week will then manipulate the range high or low, in this case the high. And the fourth week will distribute towards the range low. Week number 1 of the month, continuation. Continuation of what? This uptrend. Tapping into internal range liquidity right here, this fair value gap. Price is likely going to chase external range liquidity, which lies right above these highs. First week, continuation. Second week, accumulation, finishing the creation of the accumulation zone, CRT. Third week, turtle soups the CRT high of the second week, manipulation. And the fourth week distributes towards the opposing end of the CRT range. So this in itself is a high probability weekly CRT that you could have executed a swing trade on. Dropping down timeframes to a daily CRT, let's refine the entry. Before doing that, I want to point out this is not random. This is the high of a monthly range with a CRT forming on the weekly time frame. Now you know that there will likely be a reversal downwards. We have the weekly CRT. What else do you notice here? First off, I notice wicks. I know for a fact most of you would have all been stopped out here. How do you avoid this on a swing trading basis? Very, very simple. We'll talk about the daily CRT that I want to bring up today, which is going to be the Monday model. Okay, this is likely going to be the only daily CRT that I bring up today. However, very important. Why not use this candle? Why not use this candle? Why use this candle as the range high and low? Very simple. Very, very simple. This is Monday's range high and low. Okay? This is Thursday. This is Friday. A high probability daily CRT will form on Monday. Tuesday will soup the range high, and Wednesday will distribute towards the range low, or Thursday or Friday. Now there's another model, and Romeo calls it the Wednesday model. Sometimes instead of the turtle soup occurring on Tuesday, it will occur on Wednesday. This is traded the same exact way. Anyways, we have a daily CRT within a weekly CRT, and we are bearish. Why are we bearish? We are at the high of a range. You want to sell at the highs. Okay. Just with this Tuesday's close alone, you could have entered short, targeting the opposing end of what range? The weekly CRT range. And your entry and stop loss would have looked something like this. About a 6R trade. With about a 283 pip take profit. You would have been in the trade for exactly 15 days. So a 15-day swing trade with just over 300 pips. Now, sure, you could have entered here. Why could you have entered here? We wicked above the weekly CRT on a Tuesday, and we wicked above the Monday range on a Tuesday. That means we are bearish and we are going to expand lower. But we want to refine the model. We don't want to leave it here. That is too basic for us. Let's refine this model even more. So let's just rewind the time here to make it easier for us every time we drop time frames. We have the weekly high and the daily high and low. Weekly high and low right here. We're going to drop down to a 15-minute time frame. And try to find an order block. So we have a thick up close candle tapping into liquidity. This is clearly the order block, no doubt about it. As soon as we get a close below, order block has been validated. You can now use it as an entry point to go short, targeting the opposing end of the entire range. Tight stop loss, large take profit, about a 7.12 R to R trade here. Now, if you missed the order block, sorry, not if you missed the order block, if you entered on the order block and do not want to trade the weekly range and want to trade the daily range, your R to R would have been 2.25, which is good enough. And your EQ of the range would be right here. So you would have hit your partials. Price then moved back up into an inefficiency and reversed back down, targeting your final take profit here. That is how we refine an entry. That is how we take swing trades. Do you realize and recognize that everything I am doing here is the same thing that I do on a 1 hour chart, 15 minute, 5 minute, and so on. Everything that I do for my swing trades on a monthly, weekly, daily, 4 hour time frame is the same thing that I do when I'm intraday trading. The same exact thing. Let's take a look at another example here. So these, write them down, high probability swing models. Okay. So I explained the low here, the high here, what happened, what occurred. What about here? I see a picture perfect CRT formation. Now, would we have executed this trade? The answer is no. The answer is no. Okay, why is the answer no? And if you don't know why the answer is no, you need to rewatch this entire lecture. I had just explained it to you. Week number 3. When week number 3 forms a range, and then week number 4 soups that range, this is not a high probability CRT. Rather, this is low probability. Even though it worked, it is still low probability. Okay? Now let's just say, for example, we're going to draw up time frames here. Pretend this is on a week 2 and week 3 manipulation, week 4 distribution. All right? Dropping time frames to look for a entry lower. Before moving lower, I want to explain something. What happens if you do see this? Simple. You do not execute the weekly CRT. Okay? It is that simple. Now, can you execute another trade? Yes, I'm about to show you. Here we are, weekly CRT. What do you notice before I even get there? Daily CRT, right? We have the daily CRT high and the daily CRT low. Let's mark these by blue lines instead of black. Daily CRT formed on Wednesday, souped on Thursday, distributed on Friday and the next week. Now, this CRT is important to understand, as Monday created the low of the week, so Thursday will likely create the high of the week. If Thursday is creating the high of the week and you are seeing a wick above Wednesday's range, it is likely that this will be the turtle soup, and we will target Wednesday's range low either on Friday or the week after. This is high probability. This is something that you could execute upon. Dropping time frames to find an entry. If we can find an entry. I should have rewinded this. Let's rewind this here so that we do not get lost. One hour time frame. Order block confirmed with a close below. Price closed below this low right here. Tapped into it, enter short. Where are you targeting? You are targeting, sorry about that. You are targeting not the weekly CRT low, as I said, that is not in play. You are targeting the daily CRT low right here with a 3.42 R to R trade. Now, can you refine this entry even more? Yes, you can. I am not going to do that. This is a swing trading video. Okay. Now, I think I'm going to end it off here. There's a lot to study. I spoke quicker than I usually do. For a reason. This is my third time recording this video. I'm a bit annoyed. I have a lot of things to do today, and recording the same lecture 3 times was definitely not in the plans. But sometimes you have to do what you have to do, especially when you have, well, especially when you're mentoring students. I just want to show you guys something here. If you guys ever fall victim to you telling yourself you've studied enough, there's no more to study, there's no more to backtest. First off, I just spent 31 minutes explaining 2 highs and 1 low inside of a monthly range, and there is a lot more to explain just within this range alone. And we haven't even touched the rest of the chart yet. 30 minutes was spent explaining how to execute when price is up here, how to execute when price is down here, and what to do up here. 30 minutes was spent doing this. We didn't explain this. We didn't explain this. We didn't go into anything else behind either. Okay? This just goes to show you that there is always more to study. There is always more to learn within your charts. Not in YouTube videos. Not in mentorship videos. There needs to come a time where you are no longer watching videos, including mine. I don't want to sound like an idiot here, but excuse my language. My goal is to separate you guys from me. I do not want you to stay my students. That will basically let myself know that I am a failure as a teacher if you remain my students. You should become a successful and profitable trader. Your goal is to become better than me, better than Romeo, better than ICT. If your goal is not to be a better trader than I am, then please stop watching all of my videos. Stop watching my content. Do not subscribe to the monthly membership once it comes out. Why? Because my goal is to get you guys insanely profitable. More and faster than me. All right? I am fast tracking your success. You need to stop watching your YouTube videos, stop watching your mentorship videos, and eventually only get to a point where you are backtesting. Okay, there will come a time where the videos are worthless and useless to you, including mine. You do not need to watch my videos after you have a working model. And don't start strategy hopping either. When you have a working model, you stick to it. You stop watching videos. You backtest, 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 front test, front test, front test, and move to a live account. That's enough for my rant. With that being said, I hope you guys enjoyed this lecture. This, of course, is a side part of Chapter 4 that is releasing tomorrow. And I'll talk to you then. Have a nice one.